Welcome to the Deep Dive, your way to get plugged in without drowning in data.
Good to be here.
Today, we're digging into Star Ltd, specifically their first quarter results for the 2026 financial year, the quarter ending June 30th, 2025.
Yeah, fresh off the press, basically. Approved August 6th, same day they released them.
Exactly. So, our mission today, unpack the key numbers, figure out what's really driving things, look at the market context, and see what management strategy is looking like.
And it's relevant stuff even if you don't follow Blue Star specifically. It tells you a lot about the HVAC industry, resilience, market shifts.
Absolutely. Insights you can use elsewhere.
Yeah.
Okay, so let's jump in. The headline number. Consolidated revenue from operations for Q1 FY26. It grew, right?
It did, yeah, by 4.1%. Came in at Rs 2,982.25 crores.
And just quickly for context, ours is Indian rupees, and a crore is 10 million, so almost 30 billion rupees, up from about 2,865 crores last year.
Correct. So top line, moving up. Sounds good so far.
But there's always a but, isn't there? The story gets a bit more complicated when you look further down.
That's right, because while revenue went up, their operating profit, that's EBITDA, basically earnings before interest, tax, depreciation, amortization, minus other income that actually dropped.
Dropped. Okay, how much?
It landed at about 200 crores, 199.99 to be precise. That's only 6.7% of the revenue.
Which is down from?
Down from nearly 238 crores, or 8.3% of revenue, in the same quarter last year.
Okay, so making more sales, but less efficiently turning those sales into operating profit.
Exactly. The margin got squeezed at the operating level.
So naturally, that has to flow down to the bottom line, right? The actual profit before tax and the net profit.
Absolutely. Profit before tax, PBT, that fell by quite a bit, 27.8%.
Wow.
Yeah, down to 163.23 crores from 226 crores last year. And net profit followed suit.
Okay, what was the net profit number?
Came in at 120.82 crores. That's down from about 169 crores in Q1 last year.
Right, and that obviously hits the earnings per share, the EPS figure.
Definitely. EPS fell to 5 rupees 88 paise, down from 8 rupees 21 paise. And you can see why when you look at expenses. Total expenses were up, reaching 2,833.68 crores.
So costs went up, squeezing those profits despite the higher revenue. Okay, but what about their overall financial stability? Did this profit dip put them in a shaky position with cash or debt?
Actually, no, that's one of the positives here. They maintained a really solid financial position, ended the quarter with a net cash position of over 370 crores.
Net cash, so more cash than debt.
Precisely, and their debt-to-equity ratio is tiny, just 0.07. They're hardly using debt at all.
That sounds very disciplined.
It is. And their ability to cover interest payments, the ISCR, is incredibly healthy at almost 75, so financially they're stable. The profit dip didn't fundamentally shake their balance sheet this quarter.
Okay, good to know. And tax expense was down too, I see.
Yeah, logically. Lower profit means lower tax. It was about 42 crores versus 57 crores last year.
Right, okay. So the big picture is revenue up slightly, profits down significantly, but the underlying financial health seems quite robust.
That sums it up pretty well.
Now, this is where it usually gets interesting. When you break it down by business segment, I suspect that's where we'll find the reasons for this mixed picture.
Exactly. The divergence between the segments tells the real story. The main drag on profitability was clearly the unitary products segment.
Unitary products, that's the room air conditioners and commercial refrigeration, right? The more consumer-facing stuff.
Largely, yes. And that segment saw its revenue fall by 13.3%, down to just under 1,500 crores from over 1,700 crores last year.
13% down. Ouch.
Oh.
And the profit from that segment?
Took an even bigger hit. Segment result plunged to about 87 crores from 158 crores.
Okay, so what happened there? Why such a big drop?
One main reason cited in their release, weather. Specifically, unseasonal rains across the country resulting in a weak summer.
Ah, the classic AC sales killer. No hot summer, no rush to buy air conditioners.
Pretty much. They specifically called out the room air conditioners business being hit hard, and they note, this segment is seasonal.
Makes sense. It really highlights how vulnerable that part of the business can be to things totally outside their control, like the weather. You mentioned commercial refrigeration is also in there.
Yeah.
Did that get hit too, or was it mostly the ACs?
The release focuses heavily on the AC impact due to the weak summer. While commercial refrigeration is less seasonal, the overall segment performance was clearly dominated by the downturn in ACs.
And is this just a Blue Star problem, or are others in the industry feeling this too?
Oh, it's definitely a broader theme. We've heard similar things from other players. These unusual weather patterns, they're becoming a real factor across the whole sector. It's a headwind everyone's trying to navigate.
Right, so a big hit from the AC side. But the overall company revenue still went up slightly. Something must have performed really well to offset that, right?
Absolutely. And this is where their diversification strategy really shows its value. The other major segment, electromechanical projects and commercial air conditioning systems, let's just call it projects and commercial AC. That one had a stellar quarter.
Okay, how stellar.
Revenue soared by almost 36%, 35.9% to be exact. Jumped to over 1,400 crores from about the 1,040 crores last year.
Wow, 36% growth. That's huge. That almost entirely offset the drop in the unitary segment.
Almost, yeah. And its segment profit also improved, up to 111.6 crores from 103 crores. Not the same percentage jump as revenue, but still positive growth.
So what drove that? Where was the demand coming from?
They pointed to sustained demand from infrastructure-heavy sectors, factories, data centers, healthcare, plus good growth in commercial air conditioning from manufacturing and education. So the B2B side was firing on all cylinders.
Interesting. So the B2B projects really buffered the B2C weather hit. What about the third, smaller segment, professional electronics and industrial systems?
That one faced some challenges. Revenue declined by about 27%, down to around 70 crores.
Okay, what were the issues there?
Primarily in their medtech business, seems there's some regulatory uncertainty about importing pre-owned medical devices holding things up. And their data security business also saw some headwinds.
But any bright spots within that segment?
Yes, they did mention the industrial solutions part gained steady momentum. Good demand for manufacturing and testing sectors there. So even within that segment, it was a bit mixed.
Okay, so summing up the segments. Consumer ACs hit hard by weather, big B2B projects boomed, and the smaller electronics segment had specific issues but some underlying strength. A real mixed bag.
Definitely.
So, given all this, what's the management's take? How are they framing this quarter? And more importantly, what are they planning to do now?
Well, Veer Advani, the chairman and MD, didn't shy away from it. He acknowledged the quarter was impacted by the unseasonal rains.
Okay, acknowledging the reality.
Yes. But he also expressed optimism, anticipating that demand for room ACs should pick up during the upcoming festive season.
Right, hoping for a bounce back when people start buying again for Diwali and other festivals.
Exactly. It shows they believe the underlying demand is still there. It was just deferred by the weather. That's a key point for you to note about their expectations for that seasonal bit.
Makes sense. But beyond just hoping for better weather or festive cheer, what's the strategy to drive growth for the rest of the year, especially after this profit dip?
They're really highlighting the strength of their diversified B2B portfolio. The projects and commercial AC segment, commercial refrigeration too, they see these as key to partly offsetting that shortfall from the room ACs through the rest of the year.
Leaning into their strengths, essentially.
Pretty much. And they're not just standing still. They reiterated their commitment to strategic investments, pumping money into manufacturing capacity, R&D, and digitalization.
So playing the long game.
Absolutely. It's about long-term growth, sustainable value, not just reacting quarter to quarter. And they have a solid foundation for future work. Their carried forward order book is healthy.
Oh yeah, how healthy?
It grew 12.5% compared to last year. Stood at over 6,843 crores as of June 30th.
6,800 crores. That's a lot of work already lined up.
It is. It provides good visibility and a strong pipeline, especially for that booming projects segment.
Okay, so let's try and pull this all together. What are the main takeaways for someone listening? What does this Blue Star quarter tell us more broadly?
I think the biggest thing is how crucial diversification is. You see it plain as day here. When one major segment, like room ACs, gets hit by something unpredictable like weather, having strong performance in other areas like their big projects business can really cushion the blow. It provides resilience.
So don't put all your eggs in one basket, basically.
Especially if one basket is weather dependent. And it also underlines how those strategic long-term investments and a healthy order book can keep you moving forward even when profits take a short-term hit.
Right. Building that underlying strength.
Exactly. It's about having multiple engines. If one sputters temporarily, the others keep you going.
Okay, that makes a lot of sense. So here's a final thought, something for you listening to chew on. We know weather patterns are getting more volatile globally, right?
Right.
And there's this huge push for energy efficiency everywhere.
Mhm.
So thinking about Blue Star's long-term investments in R&D and digitalization, how might those specific investments lead to innovations? Innovations that could maybe, I don't know, make their products less vulnerable to seasonal swings and help them grab opportunities in green technology within HVAC and refrigeration. Something to ponder.